So you did it. You turned your passion into a paycheck on YouTube, and that is awesome. But there's always one final boss every creator has to face: taxes. Today, we're going to break it all down step by step and turn that tax confusion into confidence. Let's make sure you keep more of the money you've worked so hard to earn.
I mean, this quote just hits it right on the head, doesn't it? It perfectly captures that moment every creator feels. You see that big AdSense payment drop into your bank account, you start celebrating, and then that little voice in your head kicks in. Oh, right, that money isn't all yours.
And this right here is the fundamental truth we have to start with. The second you get monetized and earn your very first dollar, whether it's from AdSense, a brand deal, affiliate links, whatever, you've officially graduated. In the eyes of the government, you're not just a hobbyist anymore, you're a business owner.
All right, so that brings us to our first section, the tax wake-up call. This is where we make that crucial shift in how we think, from creator to business owner.
Look, the whole point of this explainer is to give you a clear, simple roadmap. We want to get you to a place where you're handling your finances like a pro, so you can get back to what you actually love doing, making amazing content for your audience.
Okay, on to our second section. You're a business owner. And I'm telling you, this is the most important mindset shift you can make. Everything else we talk about today is built on this one idea.
So this is the official language. Whether you're doing YouTube full-time or just spending a few hours on it a week after your day job, if you're earning money from it, the government sees you as a sole proprietor. It basically means you are the business.
And when you put it side by side like this, it becomes super clear just how different this is. When you're an employee at a regular job, your company handles all the messy stuff behind the scenes, right? They withhold taxes, they pay half your Social Security and Medicare. But as a creator, nope, you are the company. You're responsible for all of it, including that full self-employment tax, which can be a real shock if you're not ready for it. Which brings us to Section 3, tracking your income. This is the first practical step. You gotta know exactly where all your money is coming from. And listen, this is a big one. Your taxable income isn't just that check from Google AdSense. It's everything. Every single dollar from a brand deal, every commission from an affiliate link, every t-shirt you sell, even the super chats from your live streams, it all goes into one big pot, and all of it is taxable. Now, for those of you in the US, you're going to want to keep an eye on your mailbox for this form. Any single company or platform, like Google, that pays you more than $600 in a year has to send both you and the IRS a 1099. You can think of it as the official scoreboard of your earnings for the year. And the government gets a copy too. All right, now for the good stuff. This isn't just about paying taxes. It's about legally keeping more of what you earn. So let's talk about your secret weapon, deductions. This is the question, right? Is there a way to legally lower that tax bill? And the answer is a huge, resounding yes. It's not about finding some shady loophole. It's about understanding how the system is actually designed to work for business owners like you. Okay, this right here, this is probably the most important thing to get. The government doesn't tax your total income, all the money that came in. They tax your profit. And as you can see, profit is just your income minus your legitimate business expenses. So the more business expenses you track, the lower your profit and the lower your tax bill. It's really that simple. And you might be shocked at what actually counts as a business expense. That new camera you bought? Yup. Your Adobe Premiere subscription? For sure. A portion of your internet bill, the cost of hiring a thumbnail designer, even travel you did specifically for filming. If you spent that money to run and grow your channel, it's almost certainly a deductible business expense. You just have to track it. Okay, let's make this super real with a quick example. Let's say you had a fantastic year and made $40,000 in total income. Awesome, but if you didn't track a single expense, you'd be paying taxes on that entire 40 grand. But you're a savvy creator, right? You've been tracking everything. All your new gear, your software, freelancers, ads, and it added up to $15,000 in business expenses. And boom, just like that, your taxable profit is now only $25,000. That is a massive difference that could literally save you thousands of dollars in taxes. And this, right here, is why tracking your expenses is completely non-negotiable. So that brings us to Section 5, smarter tax habits. Because look, knowing what to deduct is one thing. Building a system to actually do it consistently is what separates the pros from the people who are panicking come tax time. Please, whatever you do, don't make this mistake. Because you're self-employed, nobody is taking taxes out of your paychecks for you. That means the government expects you to pay as you go, usually through what they call estimated quarterly tax payments. If you wait until April to figure all this out, you're not just looking at a giant bill, but you could also get hit with penalties for paying late.
So how do you avoid that panic? It's actually pretty simple. Just follow this 3-step strategy. 1, get a separate business bank account and have all your creator income go there. 2, open another separate savings account and literally name it taxes. 3, and this is the magic part, every time you get paid, immediately transfer 25 to 30% of that money into your tax account. Then just pretend it doesn't exist. It's not your money to spend.
All right, let's bring it all home with our final section, own your finances. This is about taking that last step in the mindset shift from just being a creator to truly being the CEO of your own media company. So let's just quickly recap the big traps, the things that can really derail a promising creator career. Not tracking your numbers, dipping into your tax savings account, mixing up your personal and business spending, and leaving thousands of dollars on the table by forgetting to deduct all your expenses. Every single one of these creates stress that pulls you away from creating. You know, we're kind of coming full circle here, back to where we started, because this idea is the key to everything. The moment you start thinking like a business owner, everything else, the tracking, the saving, the deductions, it all just falls into place. Business owners plan, they track, they take control of their financial future. I mean, think about it for a second. A huge, unexpected tax bill can absolutely crush your creative momentum faster than any bad algorithm update ever could. All the hard work, the passion you pour into your content, it all deserves to be protected by a smart financial plan. So the real question is, are you ready to take control?